The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, as we once more go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
So we have the S&P down 18, Dow down 125, NASDAQ off or up to Russell off 4. Crude, I think it was a little weaker earlier, 23.53. And of course, I think a lot of people are putting a lot of importance on what happens today in the market. The downside is this is quad witching. And if you're up at 9:35 in the morning, 5 minutes after the market opens, or 5 minutes after all the stocks open on the S&P 500, the price at which the options on options on the futures for those expire. And of course, we got quad witching, so we'll have options expiring at the end of the day. But generally, if you open higher, you close lower or flat. If you open lower or flat, generally you go higher. So it's not uncommon to see a lot of this. We got a lot of cross currents, a lot of other things, a lot of people probably on the wrong side of trades. So we're going to see a lot of movement back and forth, but not very uncommon to see a Friday and quad witching day go kind of silent toward the end and into the close. We kind of alluded to that yesterday when we saw all the action. But generally, if you see a lot of action on the Thursday before options expiration, and especially on quad, you get, I wouldn't say today's quiet by the standards of 30 days ago, but by the standards of the last 2 weeks, kind of quiet, actually. And if we have a day that we don't see more than a 2% move, it's probably going to be something to notice in the markets. But if we are making a low and beating out a low, the first part of that is to see the volume kind of come back a bit. And, is it going to happen today? I don't think so. As we start the show again, we've got 10 billion shares on it. As I said before, 30 days ago, we would have been on a Friday. If we would have been doing 5 billion shares, everybody would have been yelling up and down that it was a busy Friday. At 10 billion shares, a big thing nonetheless. We're, now part of that, a lot of high frequency traders making a lot of money stepping in before trades. And of course, a lot of action in the ETFs that kind of move stocks around, whether or not fundamentally or even technically they need it. But that will eventually kind of slow down a little bit. And at that point, we'll have some significant lows. And we'll move forward. There's going to always be stocks, and there's going to be a couple of sectors that are going to outperform the rest way before we have a very good low that everything goes off of. But you know what? There's always winners and losers in every market, whether you're going up or you're going down. The other thing is to remind you that even in horrible bear markets, generally the stocks go down very quickly as they have, and then they go back up. I would say it takes the next 3 months, if you're really a bear, next 3 months it goes up 5%, and then it pulls back to the lows or even goes lower. That's not uncommon to see the market going up about 75% of the time. It just goes down 25% of the time, a lot more. Generally, what I've seen in my 22 what am I going to call this, 22 or 23 years of trading has been that after a huge score in being bearish in the market, the bears can't wait to give that cash back. And that generally happens when the market, even in a counter trend, goes higher, and they short it all the way up only to get squeezed out. Then all the volume falls out and the market goes back down. So just understand that I know this is nerves are frayed. Dogma is being worn on everybody's sleeves, but good decisions don't come from dogma. They come from rational decisions being quietly and appropriately made. But I had to think about what I was seeing today in Traders, and I thought a lot about the two books that make a lot of difference to me over the years. Not so much in the way of trading, but just thinking about the way one should trade. And, of course, super forecasting. If you're stuck at home, you're not a big trader, you want to learn how people actually continually outperform everybody else in picking basketball winners or football winners. There's some pretty good stuff in that book from Tetlock on that. I'm also think about the at least the history from the last 300 years in rationally optimistic. Another great book. And, even though we've had tough times, 2 world wars, the 60s, the 1987 crash, the bubble in the savings and loans in 91, the dot-com crash in 2000, the 2007-8 housing crash. You know what? The market just goes to extremes, both on the upside and, as we're seeing now, to the downside. Generally, everybody says there just isn't any things. Here's where I would love to be able to play some music, because I'd probably play There's Got to Be a Morning After. Remember that from the Poseidon Adventure? Everything was everybody was going to die. That was it. And, of course, at the very end, was that Helen Reddy? I can't remember right now. But guess what? There will be a morning after. Eventually, whether it's now or later, things will go higher. Then things will go lower. And then things will go higher. Mary McGregor? I don't know if that's it. I'll have to look it up during the break. Maybe somebody else will have it. But let's not get too wound up. Generally, good decisions are not made when you're all amped up. So anyway, we got a market. Not uncommon to see a market like today close out flattish on the day. NASDAQ's basically there. Dow's down 1%. S&P's down 1%. But not beyond the scope of reason. Now, we get into Monday and Tuesday, and it's going to be probably a lot of action in those days, because we're going to have options rollover, both of those. And then probably Wednesday, we're going to probably see the market get back in gear, one way or the other. But probably a couple of sideways days, maybe Monday and Tuesday, and then looking for some action come Wednesday. That's generally what happens. Maria Muldaur? I think that was somebody else, too. Everybody else thinks. Or Maureen McGovern? Okay.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we got a lot of stuff going on here. But first of all, let's get to a little bit of history. And things were a lot rougher in the past.
That it's all just a little bit of history repeating.
On this day in 1778, Benjamin Franklin, Silas Deane, and Arthur Lee present themselves to France's King Louis, the XVI, as the official representative of the United States. Louis XVI was skeptical of the fledgling republic, but his dislike of the British eventually overcame these concerns, and France officially recognized the United States of America in February of 1778. And of course, I don't know, it was kind of interesting because Benjamin Franklin pretty much through the entire war lived over there. And I went to his house when I visited France. And later on, they found a bunch of bones in the bottom of it and found out that a doctor had lived there. And back then, you'd pay money to people to find, quote, quote, bodies for you so that you could practice medicine. And apparently that's what this guy was doing in the basement while Franklin lived on the top floor. But he had quite the war for independence, if you know what I mean. Quite the ladies' man in France. And no prudes over there, if you've read anything about what he did and the rest did during that war. And, of course, eventually the French came to our aid, gave us a bunch of arms and some people that knew what they were doing. And we kicked the Limeys out. Not on this day, but it was a couple more years. But that's it. And, of course, Maureen McGovern was the one that did There's Got to Be a Morning After. But did she ever do anything else? I don't know. But it doesn't really matter. But it just seems that we probably should have a song. And I was thinking about getting my lighter and going back and forth. Maybe a little kumbaya. Get everybody settled down a little bit. Everybody have a deep breath. But we'll see. Okay. What I wanted to start looking at was some of the majors in the market. Amazon, kind of interesting to me. I see them driving through the streets around here. They've got a bunch of new vehicles that apparently they grabbed from somebody else. They're white vans, but they've got, I don't know if they just, the other people that were doing something didn't need them anymore. Their business was shut down, but they've grabbed them all, and now they're all running all over town here. I can see them going up and down the streets delivering stuff like mad. But kind of interesting. Anyway, a little higher, back up to this gap. And again, for every, well, not for every, but in any market, there are winners and losers. Amazon, of course, doing fairly good out here. Now, it had a high back on the 3rd with about 7 million shares. You got into that, you're going to get into it with about 7 million shares here today. But certainly the shipper of last resort for those hermits or those in quarantine, either way. And those hermits, we've been trying to talk into going out. Yeah, they can point the fingers at us now, can't they? Okay, let's look at other stocks. And what I wanted to look at was Apple. I had a nice exchange with somebody last night and I think today about options in Apple. And what most people, I'm not playing options, and there's a reason why right now. And that is that if you have a high volatility environment, you're going to have a huge premium. And generally, after the first move in the market, even off the bottom, you're not going to get that much that quicker. In fact, the premiums are going to collapse probably faster than the stock can move. You want to, or let me put it this way, if you're buying options, you're not selling spreads or something, you generally want to start off in low volatility where the VIX is 12 or 11, or even for my rules and all the work I've done, under 16. If the VIX is over that, then the chances of you making a profit on that are very low. And generally the problem is that the premiums are so high that you get run out, or you never really make the kind of money you need to for when those premium or when those options don't play out. So if you were looking at making a play, selling some kind of spread yesterday for Apple makes a lot of sense. Buying calls or puts on Apple probably don't make a lot of sense, even going into options expiration today. If you're buying single-sided, just calls or puts, you want low volatility going into high volatility, and you want to sell that high volatility as the stock moves. But even then, a lot of that premium is going to go away. So just remember, the time that you want to buy options is when no one's talking about buying options. If you're buying options today or even the last week or so, it's like trying to get insurance on your house that's already burning down. Maybe you'll get somebody to write that insurance for you, but guess what? It'll just cost you money. You'll never make any. You'll never be a dime ahead. They see your house is on fire. There's no reason to do it. Other things. Let's take a look at Netflix. NFLX. We'll talk about something going on with Netflix with Tom at 3:30 today. And you got a little bit of a bounce out here, but there's some interesting cross currents for these streamers that we'll talk with Tom about again at 3:30. Little deal out here. I mean, you've got a fairly nice bounce in this. And if you look at the retrace on it, not too bad. I mean, you really got to the 618 today. That was 354. Is that right? Or 350? Not quite there. 354.07 would have been a 618 retracement of it. Got to 350.47. But you know what? If you're playing these markets, I think you're probably, if you were playing it not for the long term but for the short term, probably getting a little greedy off there if you bought it down at the lows at 290. Even if you bought it a couple days later at 300 and you were out here, probably getting a little greedy to expect it to go straight back up to the top. Very rarely are you going to have any of those do that. Other ones in this, Microsoft, we're going to talk about them also in the next hour. Just kind of going sideways here, not a lot of volume after a doji yesterday. Now, what we're going to have setting up, and I want to get into this fairly quickly, probably on Monday, because I'll find some more, is setting up confluence areas and where likely resistance is going to be to sell on the way back higher if we, in fact, go back higher. We'll talk about that when we come back. But great example in Microsoft today, and we'll talk about that. And if you need the examples, they're in Tom's book, available on the website. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We were talking about confluence levels and where to sell on bounces, and this is exactly what you want to start looking. Confluence levels are the 318 and the 618 of two different longer Fibonacci patterns. And if you look at the 175 level, the 161.91 level, and the low that came in at 135 for Microsoft, that sets you up with a range of 150.28 to 150.63, which is where resistance is going to come in. You got to 150.15, but the problem with this is it doesn't, it only works after you've had a kind of a market like we've had now, or on the way up, and when it's coming back down. So people tend to discount this method because it doesn't. The setups aren't there all the time. But my guess is I'm going to go through a lot of them and find these. If you have a big fat one that's about, like a $150 stock, if it's $5 wide, it's just going to kind of mush through those levels, and you're not going to have any kind of clear background. But when these things, like on this one, are $1 on a $150 stock, if it's less than like 1%, generally these things do extremely well at predicting where people are going to sell. And if you've done just regular Fibonacci's, a lot of times you go, the market was up or down that day. It's tougher. These tend to be, I would say, order of magnitude better at planning trades than just single individual Fibonacci patterns in the market. But very nice. Like I said, if you're unfamiliar with that, check out Tom's book. He's done very well. Another book on this subject is Joe DiNapoli's Trading with DiNapoli Levels, which is kind of the beginning. Well, I guess the guy that really kind of fired that up. Tom's added volume into these patterns, but I still like them. Joe DiNapoli patterns work very well. I love the double repo pattern, and I love this, which is just putting two Fibonacci levels together. And if they're extremely tight between the 318 of one, or the 382 of one, and 618 of the other, like you're seeing here, I'll move my mouse over it to illustrate it, kind of like the hand model on The Price is Right. You've got to do the wave in front of whatever it is, a boat or a car. And what is that called? I don't know. I'm sure there's a name for that too. Okay, so we got Microsoft looking good here. We'll talk about their news later in the day, but fairly nice. And again, you got to think about who's going to be the fastest to come back whenever we do have a low back in it. Microsoft kind of at the heart of the storm, because, of course, they're in Redmond, Washington, so fairly close. But since they probably started early, they may get out of it a little earlier. But the question is about what about updates and all the other stuff that they sell. They write the perfect software for actually handling everything and everybody going home. And the question is, how soon was everybody back? They're also, if you're talking about big disruption, their average employee, I think their age is 28. So we're not talking about people that have been at a corporation for 30 years and now kind of dusting around 60. These are generally a lot of people, unfortunately, from a lot of countries. So if they travel around a lot, could spread corona fairly quickly. But they sent them all home. So everybody's doing it remotely. Microsoft makes the software to do it all remotely. So other than maybe their tablets and their laptops, it makes some hardware now. I think it's about $5 billion a year of their business. But it's still, 5%, maybe 10% of it, which could be impacted. But probably not too bad. See if we have any other questions coming in. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. But that'll be it. What else do we have? Okay. Oh, I wanted to look at some of my stuff today, so let's look real quick. We looked at Apple already. It looks to me a great deal that was. Do we have this? we're getting some stabilization. My guess is that if I was working at Apple and trying to manipulate their stock with buybacks, that the thing that would probably do the best is not to wildly buy back, but kind of try to just get it to stabilize out and get the biggest rough edges on the way up or down. But again, they still have $270 billion to buy back their stock. I think I can probably think of other companies, but they're going to need. You're probably going to need some evidence for people to start buying back into Apple, and maybe that'll take next week. Maybe if everything quiets down for a little while. Boeing had quite the range yesterday. It's been bouncing off 98. Let's take a look. But again, light volume, sideways action is quite kind of what you're looking at. It's kind of playing around 98 now. Did get to 89. What's on the? It was out of March 18th. At some level, unless they go bankrupt, probably a buy. But again, the question is, are you a trader or some kind of long-term investor? If you're an investor with probably a 2-year time frame, I don't know if this is the actual right level to buy. I don't think you have to get in a hurry. But at some point, they're going to get airplanes flying again. And they're one of two companies that makes the big uns. So what else can you say? What else do I want to look at in the list of stuff? CAH, Cardinal Healthcare. Again, it may be looking better for these insurers than a lot of people thought with the early closure of travel to China has bought some time. We've also heard some fairly good news out of both Australia and other places about malaria drugs offering good results. It's going to take a little bit more time to find those out, but those are well-known, easily manufactured. If that is the answer next week, maybe we see a respite from the worst of what everybody's looking at. But for the most part, after it made its low on the 12th, Cardinal Health really has just kind of gone sideways here, even in the worst of things. If this ends up turning around fairly quickly, you might see a big bounce in some of these insurers that are not going to have to pay out stuff. But again, this is where you start thinking and maybe not acting just yet.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Looking at United Health, another good example of confluence levels, although generally these take a little bit more time than this. But a good example, again, and if you want to go back to Tom's book on confluence levels and how you see these stocks bounce right up into them and kind of give it all back when you're just bouncing off lows. UNH, your first high is this March 4th high at 295.84. You get the next one at 248.76, and of course you get the low recently here at $200.19. You get a fairly decent confluence level from about $230 to $236. You got to, let's call it 233 and on the spike today, and then that's kind of it. Now what you're looking for is if you bought it off the low, you want to make sure that you're selling into these levels if you're just trading them. And now, after you get that initial move, James Wyckoff traders called that an automatic rally. Then you wait for a longer pattern to see these things set up. So not bad. In fact, I'll probably do a special for my subscribers on Monday on these confluence patterns and where to look. See what else we have out here in a list of stuff I wanted to look at. CSIQ. Hadn't really had a time to really look at these solar cell producers. You did bounce today. One of the reasons why I think about the stock so much is the one that I bought on March 5th, 2009. It was one of the stocks that it was testing previous lows on 10% of the volume that it did 3 months earlier on that March 5th low of 2009. A great bunch of stocks did at that time. I remember Perry Ellis. If you want to go back and look at some huge moves and why I'm kind of excited to see this big pullback is generally what you do is you find some stocks that literally the volume, it didn't half or even a quarter. I mean, it was 10% of what it had done like 2 or 3 months before. This one, Perry Ellis, man, in my old age, I'm starting to forget. I think I had like 4 stocks. 4 stocks, and then a couple others. But there were a bunch of them that I bought for like $2 or $3. Went to 14, 16, popped off the bottom. You make so incredibly huge loads of cash on these if you can find the ones and really use the volume. A lot of times people look at the volume. When I was trading and starting listening to Tim Ord and Tom O'Brien about volume trading, a lot of times 10% was all you needed. Something with 10% lighter volume actually gave a fairly good signal. It's I think a lot of it has to do with high frequency trading, but I kind of start now at 50% of previous highs and lows and really like to see stuff with 20%. But I think you're going to get those. And, of course, you're going to be a good trader, both higher and lower. There will be winners and losers. Canadian Solar got up to $15.50 today off a $12 low 2 days ago. So pretty nice. But again, probably, you get a big pop on quad witching. Yeah, I'd be probably itching to sell. Question about Dollar Tree, DLTR. Did it bounce off of the 2015 low? Take a look. Certainly did. We've been talking about that. Was it this week or last week? I think it was earlier this week. You had a 6.5 million share low on October 14th. That was 2015. $60.31. Yeah, 6.5 million shares. You got 4 million shares. And again, yeah, you got a nice bounce off that. Again, a lot of times when you get these bounces, they're going to be what James Wyckoff called a automatic rally. And that's not a rally that has preparation and everything set up for a larger move. And those larger moves come off of time and tribulations at lows. But yeah, nice pop. I don't know if these guys are closing, but, my guess is there'll probably be a lot of business in this as soon as the worst of this is over. Dollar, is this Dollar General? That's Digital Ally. DLR still puzzles me. This is Digital Realty Trust. This thing held up absolutely stone-faced in the eyes of this entire thing. You got a little bit of a retrace and a bounce today. I looked at this yesterday. You had a nice move up on the 10th. Right in the hint of everything going south. Went up on 10 million shares that day. Went down yesterday on 4.4 million shares, today on 2.4. I got to find out more about that this weekend and see what is going on with that. But it seems like why everything is in lockdown, people can't wait to rent new space in San Francisco. It is interesting. DOG. The dogs of the Dow, nice kind of move back off 47.30. What is that? 47.53. This is the short. 68. I don't see anything in this, Jim. You got a little bit to the upside today, but you got a lot of gaps to fill on the way back down. But we'll see. Okay, what else do I want? A question about dust coming in. Amazon's buying those warehouses from DLR? Well, thanks. I was kind of looking around. That is kind of interesting. Gold miners in dust. Do I see anything here? You had a spike to 1780, gave it almost all back. Wow. Again, this is when things are broken in the market. You see these kind of moves, but up a little on that. Of course, gold doing well. They supply the warehouses for Amazon. Okay. That is interesting. Well, I have to say that's the strongest stock in the market then, that DLR. Although it's coming down as things get better, I wonder if that doesn't hold true. But it does look good now. Question about the GDX. You came off the bottom, kind of a nice reversal pattern on the 16th. You popped up to 25.50. You came back with some volume, though, the next day. Now you're kind of going sideways. Man, if you could get this at about 18 with light volume, you got light volume on today. Just whether or not how much you can get to the downside. I'd love for about 18 GDX would look very interesting if it continues this light volume. We'll be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride a next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And Ramen Capital insolvent. No customers. Well, I didn't like their noodles anyway. But I'm just kidding. Okay, question about other stocks out here. And NVDA. 2 things you want to be looking at in technology is where is the stuff built? And can they, when the thing's over, what kind of business are they going to have? NVIDIA, $200. Not long ago, that would probably have been looking at a fairly good stock. I mean, they got intellectual property at the wazoo. The question is, what kind of business are they going to get? If someone's got loads of cash, they'll probably be ordering lots of these and playing games until the quarantines are over. But I don't know if there's anything really going on here at the moment. A lot of sideways action, which is what you want in a longer term, not a shorter term move. So I wouldn't get too excited about it today. But we get to go along 2 weeks, maybe some of these drugs turn out to be a lot more effective than the naysayers say. They say nay, so they're naysayers. But we've got a handful of people, both Australians and the French, that were saying that the malaria drugs work really well. We got to know somebody else saying they don't work at all. But I don't know if that person actually did any testing. So we'll find out. It'll work its way out. But what I was going to say is that this is a pattern you want to look at if we are going to turn around. You want these things to kind of base out. We're probably going to have a U bottom, which is going to take a little while to get going in. And we'll see how that works out. In the meantime, sell when you can at the open. And we'll see you here Monday. Same bat channel, same bat time.